Mike Briggs is our cattle market analyst this week. On April 20th, the USDA released its April Cattle on Feed report. According to the report, the United States cattle on feed totaled 11.7 million head on April 1st. This month's inventory was 7% above last year's total and is the second highest April 1st inventory since 1996. We talked with Mike Tuesday morning about cattle market prices, the current status of demand and supply levels, and the increase in inventory, but began by looking at the USDA Cattle on Feed report.
April Cattle on Feed report was basically neutral. Some people call it a little bit bearish. You had a big cattle on feed number. With cattle on feed reports, it's about how do expectations match up against the actual numbers or numbers against expectations, and it was pretty much flat. You had a decent marketing number with one less slaughter day, and you had placements that were down from last year, which was probably a good thing, or we would have had an even bigger cattle on feed number. I think for the most part, it just really didn't mean very much. What the market got out of that is we've had a higher board this week because we didn't exceed expectations and have worse numbers. So I think we've kind of put a bottom in this market for a little bit. I think we're going to be okay. We should be uptrending into probably Memorial Day like we usually are.
According to the report, placements in feedlots during the month of March totaled 1.92 million head, 9% below 2017. Net placements were 1.85 million head. We further asked Mike about the current cattle market prices.
Current prices are interesting. A couple weeks ago, this cattle tsunami we talked about last time, the market basically acted like it was here. When I say the market, the futures market acted like it was here. And we ended up having to sell fat cattle way cheaper than we ever should have because demand is good. And as I keep saying, we're coming into our best demand period of the year. And this thing got way out of whack, the CME, and the fact that they don't want to self-govern or self-regulate themselves and keep a lid on the position sizes of these funds. Because when these funds make a decision that, well, there's a cattle tsunami coming, we're going to beat the board up, there never was. It hasn't happened yet. I don't think the big supply of cattle is even coming until July and August. So right now, it should be good. So I think what those funds have done to us, they took away our marketing period where we were short on numbers and we didn't get the prices we should have gotten. They've beat this thing up so bad that we took lower prices than we should have had to. Now the good thing is, I think we've put in a bottom for a little while. These prices are going to come back. We're going to be okay. I think cattle feeders are going to be profitable. We're not going to make the money we should have made. The packer's just been scooping it in with both hands. Now his margins got adjusted a little bit last week. I think maybe we're going to get a little take back a little bit of that here for the next couple of 3 weeks. You know, but once again, I say this every year, but once you get through Memorial Day, it starts to get to be pretty tough sledding. And I think as you get into June, your supplies of market-ready cattle are going to build right about the time you start to lose your demand. So I think that we could struggle there a little bit in that July-August timeframe. But right now, I think we're good. I think we're going to end up with live cattle prices back here in the mid-20s. Maybe we have a shot at 130 if we can really see some good demand. And what we need to see is no more nor'easters or no more bad weather in the east where the population centers are, so we can start picking up some demand. Hopefully there's a little pent-up demand there so we can get a real quick boost, and that'll punch our prices up to where we'd like to have them be.
When it comes to supply, Mike believes that late summer may be a bit of a struggle.
Not right now. I do not think supply is going to be an issue until we get later in the summer. You get past the 4th of July, and I think it could get really bad. When I say really bad, I'm talking about back down to that $1.05 range in the worst. And that is, some of that's predicated on how much demand do you actually lose. Maybe we don't lose any demand. How big are the cattle? How many extra pounds of meat are we putting on the market? You know, last year we had a big glob of cattle and we didn't really put hardly any extra pounds on the market because we were marketing them. Now everybody, and when I say everybody, cattle feeders know that big supply is out there. So we're going to market cattle pretty readily, especially if you see this market increase. People are going to pull cattle forward. Well, when you pull cattle forward, that does two things. One, pulls cattle forward out of a marketing period, and two, you're going to sell them at a lighter weight, so you're putting less tonnage on the market, all of which is really great for the market. You know, we thought it was going to be so horrible last August and September, and we kind of walked right through that. I think that opportunity is there again, but we'll see. You know, we in eastern Nebraska have had a really fortunate, yeah, the winter's been long, but we were fortunate because if you were north of 92, you just got beaten to death with snow and terrible storms, and we got really lucky here. So my cattle are probably in better shape of the guys in northeast Nebraska, maybe even some of the guys in western Nebraska. So maybe their marketings, they're gonna have a little trouble pulling cattle forward. I'm gonna be able to pull cattle forward, Kansas is gonna be able to pull cattle forward. So hopefully that lends to not making this thing as bad as some people think it's gonna be.
Due to the possibility of declining prices, we asked Mike for his current advice on marketing cattle.
I think as far as marketing cattle, market them as quick as they're ready, because I don't think these prices in the mid 120s are going to stay here. I think we're going to get back down into the teens, and when it gets really bad, probably see 110. And I know those cattle won't make money there. These cattle will make money in these mid 120s, and I think you just got to keep marketing cattle as soon as they're ready.